Welcome to...
Hey, I got this, Carl. Welcome to Direct Credit Funding with Jason. I've got my credit Carl here with me. We're going to have a little bit of education session because Carl tends to think about things a little differently than we do in the business credit world.
Because Credit Carl knows everything, just like this, Jason. Are you ready for this?
Oh, please.
I am going to start a new business. So I need some funding.
Another new business, Carl. Let's hear it.
Hey, I'm an entrepreneur at heart.
You are. That's true.
Okay, so here's what I need. I need 2 yachts and a whole train, a complete train.
Complete train.
We're going to go coast to coast. I've already found them, but I need these funded immediately.
Immediately.
Do you want to know the business plan?
A little bit. Yeah, I'm curious.
Well, I thought we could sell from the Atlantic to the Red Sea, and then we could get on a train and go to the other side of the country and go to the Pacific. So it's like one big party. You get off the boat, the yacht, because I just don't want a cruise ship. Credit Carl needs a yacht. We do things in style.
Okay, Carl, there's so much wrong with your
You don't like my business model?
It's a model. I guess we'll prove if it's going to work or not, or break or not. But here's what we're going to do for here at Direct Credit Funding. Unfortunately, there are a few things that we are unable to finance. And you actually hit 2 of them, believe it or not, trains and yachts.
You're tearing up my heart, Jason.
I'm just not the one to do it here, I guess. Someone should put you out of your misery, quite honestly. Jesus Christ, quite honestly. Yeah, and say, no, that dream is dumb. But it sounds kind of dumb. We didn't call it dumb.
The entrepreneur of life is never dumb. I am going to try this. So if you can't do a yacht on a railroad, what can you do?
Well, Carl, I'm so happy you asked. I actually brought a few examples of some of our recent deals that have come across our desk, and we're going to talk about those and see which ones we have done and not done.
All right, I'm excited. Let's go. What was the first one?
All right, first, Carl, here's the first one. Tell me this, Carl. Tell me if this is someone you would possibly lend money to.
Okay.
We got a supermarket looking for refrigeration. They need they're opening a second location. They've been open since 2020. They're looking for refrigerators, gondolas, shelving, looking for $200,000. And they have a 700 credit score and a 756 credit score.
I'm going to say no because they've only been in business for 4 years.
All right. Yes, we're going to fund this deal. This is actually one that we approved. We liked that they were expanding to a 3rd location, which was good news for us. That means they've done well at 2 other locations. The owners have good credit score. It's not a credit score. They've got a 705 and a 678, which are still decent credit scores. I believe we asked to see their bank statements to verify some cash flow, and we approved them for $170,000 worth of equipment. Oh yeah, we did have their banks. They were very good.
But wait, why did they have 2 credit scores?
There were 2 owners, 2 personal guarantors.
Oh.
They had 2 individuals that owned the business.
So is that way different than co-signing? Or does the lower score become the main signee?
2 different questions. The co-signing, when you start a business with a partner and you reach 50-50 owners, each of you are going to have to sign on loans when you borrow money, when you go to borrow money.
Oh, Carl did not know that.
We are looking for any owner in a business that owns more than 20% of the business to be also a personal guarantor on the loan.
So what I'm hearing is, if you're going to go into business with someone and you are going to have ownership of more than 20%, you need to make sure your credit is well enough to carry any loans that the business may need.
Yes, or vice versa. You need to make sure the partner you're getting in bed with has good credit, because it will happen all the time that people will come to us and we're not able to fund them because we have to look equally. Because a guy with bad personal credit is going to be a drag on the business, regardless of how good this guy is. The propensity of his bad information bleeding over to the business can affect the entire business. So we're looking for all of the owners, the majority ownership, meaning 20% owners plus, to be guarantors on the loan.
Well, Credit Carl learned, don't have outhouse type credit when you go into business.
Yeah, and make sure your partners don't also.
All right. What other kind of things? I like this game.
This is going to be fun. All right. This was a non-emergency medical transport. So this is people that...
Ooh, the Ghostbuster car.
That was a hearse. No.
Okay.
But we will finance hearses and limousines. So
Did you know that people are dying to get into those? Credit Carl's got jokes today.
pa-da-da-bum-bum. Non-medical transport. Looking for a handicap vehicle. They had a 642 credit score. So what have we learned? Is a 642 good or bad? Or
It's like a D-ish.
it's a C. It's
C?
definitely a C. It's a C. A D
Okay.
is going to be below 600.
Oh, okay.
Okay.
Credit Carl's learning. Thank you, Jason.
So 642 is kind of a strong C credit. They're looking for $25,000, so not too much money. And their time in business is 2 months ago.
No, I wouldn't loan him money.
There you go. See? And we didn't. We said no. Now, this is one, however, we did say no, but we did offer with a strong cosigner, we would possibly be able to approve them.
Wait, direct credit funding will give an alternative to what they can do?
We,
So a no is not a no. You're going to try to find a yes?
yeah, this would be a no at most places, but with us adding a cosigner to the transaction, someone that's got strong credit, better than yours, deeper than yours, mom and dad, someone that's involved in the business, we were able to prove that. We were able to offer an approval to this customer.
This is interesting, Jason, because I just got an email from Instagram. Someone asked, do I need to present my business plan to you? So when you're saying they're new, do you guys want a presentation or does it depend on the business? Let's say if it's shorter than a year, do you request a business model plan?
Here's how we're going to answer that, Carl. The more information you give me, the better the interest rate I can get you. If you want to give me just your credit score and say, hey, I need $50,000, look at my credit, do I qualify? You're going to get my highest rates if you're under 2 years in business. If you can say, hey, my credit scores, and you're going to have credit score probably anywhere from 670 or better. So I'll take your A and B credits. Your rate's going to be high. But if you're willing to provide me more information and have better credit score, provide me that you've got a 700 plus credit score, that you're a homeowner, that you have proof of liquidity, which means cash in the bank to cover the first year's operating expenses, a business plan. The more information you can give me, the lower rates I'm going to get you.
I like the word liquidity.
Liquidity is huge, especially in a startup. As we've talked about in our previous episodes, the first 2 years is when you're most apt for failure. And so when you go to start a business, you should plan on having 6 months to a year's worth of cash reserves available to help you through that hard time, because it's, nothing's ever going to go according to plan. But the more information you can provide me, so yes, I would love a business plan. Am I going to require it? No, but if you can give me one, it makes you look better. It gets me to get you better cost of funds. Oh, this was a fun one. All right, this was a farrier service.
A what?
Yeah, I knew you'd know that one.
What is a farrier?
A farrier, Carl, is the heartland of America. It's as blue collar as you get. Like, you're Mr. Blue Collar, credit, you know everything. Well, farrier, you didn't know.
I didn't know.
Okay. A farrier.
Because I'm thinking of like Robin Hood, like a ferry.
Like a farrier, as we will teach Carl,
Teach me.
is a horseshoe guy.
A what?
A horseshoer.
A horseshoer?
When you have a...
Like when we go to our like family reunions and we throw horseshoes?
No. Do you ever watch on video when they have the guy go around and shave the horseshoes and put new horseshoes on a guy?
Yes, I get so lost in those.
Okay, that's a farrier.
Wow, that's
a farrier.
How did you fund somebody? What did they need?
These farrier trucks that are pickup trucks that have a back end that has all their farrier tools of where to put the horse and all your things, and they have farrier trailers. Anyway, he's looking for your farrier trailer so he can go service the horses in a pickup truck. Been doing it since 2018.
Okay, so that's good time.
Yep.
Credit Carl likes that.
He's looking for $71,000.
Ooh.
And his credit score is a 722.
I get nervous over 25,000. Credit Carl gets nervous about that, Jason.
I love over $25,000. We do deals between $25,000 and $500,000.
That's so much money.
Right? So much money.
I'm going to guess that you did, in fact, give them this loan.
We did approve this loan. This was approved. This will fund. I think the game we're going to play is Will It Fund? And this did fund. Will It Fund? Okay. This is a mobile vision hearing testing company. So this is an optical doctor, an optician that travels and comes and sees you. Since medicine's trying to move back to kind of more concierge medicine where the doctors and healthcare providers come out to see people.
Yeah.
That's part of this move.
Like a door-to-door.
Like a door-to-door. Time in business, 2017.
That's good.
Yep, looking for $90,000.
Ooh.
That's a lot of money.
Okay.
We're looking at that one a little higher, see what they do. And you got a credit score of 620.
Okay, that is like low C minus credit, if Credit Card remembers, right?
Yep.
See, I'm learning, Jason. I'm learning.
You're doing good.
I'm going to say no, it didn't fund.
Okay.
And knowing what DCF does, you probably gave them an option to where it could be funded if this.
So here's what we gave an option. We did not fund the deal. So no, this one did not fund.
Did not fund.
This was a no.
Right.
This was a decline for the purchase of the equipment. However, we did offer them a working capital loan if they provided 3 months bank statements that showed cash flow.
Okay. And we'll get an update later.
We'll get an update later on that one.
All right, Jason, I'm going to flip the script. Let's see how well you know your business.
Okay, let's do this.
Credit Carl is going to stump you.
All right. Will it fund?
Will it fund?
Will it fund? Number one. Let's go.
Number one, business started in 2019.
I need to know what they do.
It's a farming
Agriculture.
company.
Okay. Started when?
In 2019.
Okay.
And they were looking for a John Deere corn head.
Okay.
What is that?
Corn head is the thing, the attachment that you put on a tractor that you drive down the cornfield that harvests the corn.
So it's not the full tractor, it's like an accessory?
That's an accessory to the tractor, yes. Which we do fund accessories. We don't have to do the tractor. We will fund just the accessories. So far it's a yes, but we'll.
But they want $95,000.
That's normal
for an accessory.
That's normal.
Farming is expensive.
Farming is expensive.
Their credit score is a 664.
I believe we did approve that deal. Yes, that will fund. That will fund. 660 score, 2018 time in business, $90,000, agriculture. Yes, it will fund, and yes, we will do annual payments for that customer also because that's what they need in the farming world.
Wait, annual payments?
Annual payments. So a farmer plants the seed, grows the crop, harvests the crop, sells the crop. They don't get paid until the crop is sold. So we will give them annual payments because they only get paid once a year when the crops come in. So we structure their loans so that their payments are due once a year when their crops come in.
Credit Card has a big question right now.
Yeah.
I've never understood this. It's one payment for the whole year.
Yes.
In this structure.
Yes.
How does the rates work? Is it still accumulated monthly rate, or is the rate?
It's actually simpler than you think, Carl, honestly. That
sounds really hard.
No, that annual payment of probably on that $90,000 deal, probably $18,000 a year, $19,000 a year, whatever that is just $18,000 or $19,000. If you divide that out by 12 and figured out what the monthly payment was, you just take those 12 monthly payments, add them up to the 12, and they're the same thing. You're just making them all at one time.
That's interesting. Credit Carl did not know you could do that.
Yeah. It's easier for the farmers.
I got another one. All right. I'm going to get you on this one. Will it fund? Transportation. They wanted 18 units. They've been in business since 2017. So Credit Carl knows the length is great.
Length is good.
But their score was 564.
Wow. Ooh.
Wow. I'm going to say it didn't fund.
That's a no. That did not fund.
Okay.
No, that was a no. No funding.
And they were looking at 18 trailers.
That's a lot of trailers. The credit score is going to kill this deal. That's a no.
Would DCF offer something different? Because the length of time has been good.
In today's world, with trucking the way it is, and trucking's a high risk, and a lot of companies going under right now, that's not a customer we're going to do business with until they can improve their credit score.
Even if they lower the amount of units they needed.
This is a customer we're going to counsel to get their credit improved and circle back in 90 days.
Yes, this is where Credit Carl says, vendors, stay in touch, address some issues. All right, this one looks like a good one. Transportation, they want 14 units of a Cascadia truck. I don't even know what that is.
Cascadia is a type of semi-truck.
Ooh, like a big rig?
Like a big rig sleeper.
Credit Carl wants to drive in one of those.
That'd be pretty fun.
So they've been in business since 2020. And there's two owners because there's a 716 and a 727 credit score.
Those are both good. Those are both AB credit.
And they're looking at 83,000.
Okay.
I'm going to say this didn't fund because the length of time they've been in business.
They're in business since 2017?
2020. Incorporated, but business since 2003. I don't even know what that means. Time in business versus incorporated. I've never heard that.
So that means they started out as a sole proprietorship, whenever the first, 2017, and then they incorporated in 2020.
Okay.
So that means their company grew because they started just as one single owner and, probably one guy driving one truck. And then the company grew, and it grew into 18 units is what that actually means, is they have 18 units in their fleet currently. So they're a decent sized fleet. And they're looking to add another truck, I think you said, for
14 units.
They have 14 units. 18 was the customer before.
Yep.
So that's a decent sized fleet. They've been around since 2020. They have 2 owners with 700 credit scores.
Both of them, yeah.
For a $98,000 truck, that absolutely funded, was approved, and I think it was with 1 payment at signing.
You are right. What do you mean 1 payment at signing?
So we offer 100% financing of the equipment here. We're not looking for a down payment. We're not looking for a security deposit. We will fund it with either 0 payments at signing or 1 payment at signing.
All right, Jason, I have a lot more, but I love this game, and I think our audience is going to love this game. So we're going to have some series of...
All right. Will it fund?
All right. So where can everyone get a hold of you and drop their questions at?
They can subscribe to the YouTube channel, find us, ask questions for us, ask questions, because that's now one of our big themes. So the more questions, the better. And follow us on Instagram. You can reach us at the website, directcreditfunding.com, and give us a call, 888-844-7676.